title around of this one a little bit. It's going to be talking about how the Fed rate cuts won't work. And if you just kind of watch the lumber futures market, it'll be very telling of what's happening within the economy. Now, a lot of people look at the Federal Reserve and what it is that they're doing with the Fed funds rate as the major impact to the economy, as people are like focused in, like hyper focused in on the Federal Reserve and what it is that they are doing in order to conduct themselves within this economy, but then not realize that everything that the Federal Reserve is doing with their rate cuts or rate increases does not impact the economy like it once had. But yet nobody really seems to have internalized this. I find many times within the articles that I read, or listening to the other economists out there, they are so hung up on what it is that the Federal Reserve is planning on doing with the Fed funds rate, but yet they never include the neutral interest rate. They never include the fact that they hit the lower bound of zero and fail to achieve the inflationary scenario that they are looking for. And then on top of all this, a lot of people don't understand how it is that the money printer go burr, causing the prices to go up in lumber, have now seemed to evaporated out of the economy, and nobody seems to be able to explain why it is that lumber futures are back down at their normal price. Now, over the last, say, 2 or 3 months, we've seen some decent increases within the lumber futures. In fact, I think they had bottomed out in July around 418 per thousand, and today we are at like 465 or I'm sorry, 565 per thousand, which even just in the course of like the last 2 months has been a 10% increase within the lumber futures price, but yet the demand is not there. Now, you can go and look at like housing starts or new starts or building permit issuance to show that the demand is falling, not increasing. But yet we see the prices increasing. Everybody wants to blame this on financial conditions or the Fed funds rate or, mortgage rates or whatever. But yet very few people want to internalize this as a supply and demand issue, which is ultimately what this is. It was a supply-demand issue that caused prices to move up as dramatically as they did, and it's a supply-demand issue that is now bringing the normal prices to the lumber futures, and with the shortages that are happening, you're seeing the increases taking place. None of this had anything to do with the Federal Reserve and the adjustment of rates. None of it, not within the lumber industry. I've been calling out this lumber market for a very long time. And although we have seen lumber futures down for almost a year now, over a year, and I have been predicting that any kind of uptick in demand will then zap whatever little inventory we have within the lumber market, we are now starting to experience that situation. Like, it doesn't have anything to do with the interest rates. The Fed cut rates, mortgage rates went up. Right? It does not have the same impact like it once did. And when people internalize it in a fashion that is the idea that the Federal Reserve cutting rates is going to be the major impact to the economy, they misalign what it is that they need to do with their life. They simply miss it. I have to ask many people, prior to the Federal Reserve lowering rates 6 weeks ago, and you had an understanding, you knew, like, ask yourself this question before they cut rates. You knew that they were going to cut rates by 50 basis points. And you are in mind of getting a mortgage. You knew, just take for example, you knew that the Federal Reserve was going to cut rates 50 basis points. Would you still take the initiative to go out and take out that mortgage before the rate cuts took place? Like, how many people would internalize this information saying, I better go out there and get my mortgage today before the Fed cuts rates? Because after they do, mortgage rates are going to go up. How many people out there were communicating in that fashion? I can't find a single one. I can't find anybody out there who would have said that. Like, I didn't say it. I didn't find any other economist out there saying it. But what I did say is that the Fed cutting rates is not the impactful position in which that people should be viewing in order to conduct themselves. The rate cuts do not mean as much as they once had. The communication about it has everything to do with it, and what it is that people are feeling coming from the ideas of what it is that the Federal Reserve is planning on doing in the future. I have tried to communicate this as much as I possibly can out here on this channel. And still seeing, like, I'm reading an article from Drunkenmiller right? Who's like one of these big time economists working with George Soros, you know, the big money men and stuff like that. And he says, man, I got two predictions. I had two predictions. One of them I got right, the other one I got wrong, is what he was saying. He said inflation was going to fall, but that the economy was going to go into deterioration. He said, well, the inflation fell, but the economy didn't go into deterioration. I wonder why. Do you think maybe it's because it's a recessionless recession? Like I have been predicting for years now? Saying that because the Federal Reserve and the government during the pandemic essentially bailed everybody out. They had a pre-bailout taking place. And now everybody's confused. How come it is that we seem to have that appearance of a soft landing? We're not going into economic downturn. We have inflation coming down. Apparently the Federal Reserve has figured it out. Like all these people are very confused about what's going on within the economy. But yet I look back over the last 5, 6, 7 years, and it seems to me that according to the Fed's monetary policy strategies from their own statements, this is exactly what they were looking for. Like, exactly. People are like, man, they don't know what they're going to do. They're waiting for the next administration, all this other stuff. No, they're not. That's not true. That is not true at all. You go through and you read their statements, you read their speeches, you listen to what it is that they are conducting for monetary policy, the strategies behind it. They're looking for a moderately above 2% inflation rate. They got it. They were looking for the unemployment to stay low and bring prices down. They got it. They figured out how it is that they could communicate out there to the public, have the public be completely confused about what's going on, hanging on every single word that the Federal Reserve says, believing that they are acting off of a whim. That's not how it's going down. Follow the lumber market. You can see it. When lumber shot up to $1,700 per thousand, and the individuals out there who were saying, no, this is not money printer, which was very few people, like I was like really the only one, saying, nah, this is a supply demand issue. You are going to see the prices come back down to normal. Now that happened. Nobody can explain that. Nobody can explain it. Everybody says, no, it's the price, it's the value of the dollar that is being destroyed. It was just like, so why did that not occur in lumber? Right? Why is lumber the one thing that didn't happen to have a price increase due to the fact that there was dollar destruction? Neither did oil. Really, neither did silver. Right? Three of the most vital commodities known to man, and failed to achieve the inflationary scenario that everybody knew was taking place because of the dollar destruction. Okay? So you have to ask yourself, am I understanding this correctly? Okay? When you have the dollar index sitting at a high, it's not sitting at a low, it's sitting at a high. Comparatively to the rest of the currencies that are out there, the dollar is kicking ass. It's not losing purchasing power. It's gaining purchasing power against the rest of those currencies that are out there. Now, when we consider what it is that's happening within the United States, and we have the supply-demand breakdown the supply breakdown that we had, creating the supply-demand imbalances, which would then reflect within the pricing, yes, we can find that. We can find evidence of it. And now if we give it the meaning, this is dollar destruction happening right here and causing these prices to go up, you fail to understand why lumber didn't. Because you have to use the same excuse if you go into lumber. So understanding it from the view of a supply-demand breakdown or supply-demand imbalances and supply breakdowns, profit margins that are falling, now you can understand it from a different position. You can say, okay, these mills out here cannot operate at 500 per thousand. They have input costs that doesn't allow them to be very profitable at 500 per thousand. In fact, they're cutting such thin margins right now, many mills are shutting down, curtailing, depleting the inventory that is out there. And although we haven't seen an uptick in demand, we're starting to see the prices move up. Why? Because supply is tightening up. This makes a hell of a lot more sense than trying to say, well, the dollar destruction and the purchasing power, that's the reason behind all this. Very difficult to then take that point of view and apply it to lumber because it doesn't work. It's just not there. See, I look at this and I think about what it is that the Federal Reserve is doing, and the cutting of interest rates does not ease the economy. They're so far above neutral interest that any position that they take that's other than zero on the Fed funds rate is restrictive. I mean, ultimately, they cannot adjust rates to stimulate the economy. It's not possible for them anymore. They proved that better than 10 years ago. Almost, how many years ago is it now since the great financial crisis? I mean, we're going on, what, 16 years or something? Like, after that day, after the great financial crisis hit, they dropped interest rates to zero. That was it. Monetary policy adjustments through the Fed funds rates was no longer an effective tool. And now, since nobody seems to understand that, it makes it very difficult for them to understand why it is that this economy looks the way it does. How it is that they can see inflation coming down. Everybody's talking about inflation coming down. There's, the Federal Reserve is achieving their soft landing, watching the inflation come down, but yet here's lumber ticking back up again. Right? Isn't it supposed to stay down? Like, why would lumber go up if the demand isn't there? If it's not dollar to why? Why is it happening? It's because the supply of it is so depleted. Once you see it, once you understand it, once you know the Federal Reserve strategy, then you can apply that strategy to just about everything within the economy. And you can understand it in a much better fashion than dollar printer go off, prices go up. How hard is it to understand that part, right? But then again, it doesn't work like that. All right, doing well, Brody. Talked to my captain this morning. Still don't know if I'm going fishing or not. Whatever, the glass is half full. Right on, all-nighter. Glad to see you up in here. We got stock. What does that say? Stock occupants, revent, middle class. What does that say? All right, new economic perspective is still free as far as I know. All right, one could say the star burns brighter before it implodes, yeah? All right, this question has been burning in my brain. Great, perfect, this is what we wanted to see. What are the odds Trump can force manufacturing back into America and we buy what we need from ourselves? Isolationism. Hey, great story. I mean, I love the idea behind it, right? Now, in order for this to actually work, then what you would have to be is in a position in which that the standard of living is going to be competitive against the rest of the world. Otherwise, you're not going to find where this is going to be returning manufacturing back to the United States. We are in a position in which that we have to buy the stuff from the rest of the world. Now, we don't have to do this, right? This is not something that there is no rules to any of this stuff. But if you understand how it is that we got into this position and how it is that the dollar being the world reserve currency, how we get those dollars out there to the world, how is it that the world is supposed to receive these dollars if we are not in deficit spending, meaning, or deficit trade at least, right? Meaning that we import more than we export. Okay, if we want to end all this stuff, this whole idea, and we're not going to import all this stuff, we're not going to export all the dollars, who's going to be buying our debt? I mean, if you don't export the dollars out there, they're not going to have the dollars to buy our debt. And if they don't buy our debt, who will? All right? If they don't buy the debt, then you're going to find that the interest rates are going to rise dramatically, which is going to be very painful on most people who rely on debt. Because again, if you don't have the world buying it, who is? So maybe you just go into not as much debt, right? We won't spend as much. Well, then how is it that you plan on bringing manufacturing back to the United States if you don't have investment into manufacturing? Well, then you would have to be in a position in which that the manufacturers are going to be competitive against everybody else out there in the world, because you would have to sell your products to the world. Because the United States isn't going to buy it, we're not taking out any more debt. You see what's going on here? If the people don't have the money, how do they buy the product? You don't. If you make the product and you sell it to the world. That's how that works. And so if you're going to sit there and go, okay, well, no, we're just going to do this isolation thing where we're going to do all of our own manufacturing for ourselves. We're not going to import, we're not going to export. We're just going to keep it all local. Okay, well, that's another fun story, but we consume a hell of a lot more than we produce. So now what you're going to find is that there's not going to be a whole lot of production coming into the United States as far as the world providing us with production. We got to produce it ourselves. We don't produce the things that we really want from the world. So the things that are here that we do want, that we don't make, that we are getting from the rest of the world is going to go up in price. Because we're not buying it from them, we got to manufacture it ourselves, but we don't manufacture. Right? See, this stuff, it's a great story to tell, but the reality of the situation is that we just simply don't produce like we did back in the day. Like back in the 40s, 50s, 60s, even going into the 70s and 80s, we were a manufacturing nation. We produced stuff and we sent it out there to the world. Now the world is producing the stuff and sending it to us. If we need to produce our own stuff, we don't have the capabilities of doing it. We have to buy the production of the rest of the world. And if the rest of the world didn't send us their production, we would not be sending them dollars. If they didn't have the dollars, they can't buy our debt. It isn't going to work. Like, I mean, the way it would work, actually, I shouldn't say it won't work. How much time do I have? This is how it would end up going down. If it was to truly be that way, like we're going to bring manufacturing back to the United States, what we would have to do is we would have to lower the standard of living of the people, right? Or at least not allow it to rise. This is literally the only way this can go down. We would have to produce and save in a significant fashion. No more spending, right? You can't spend. You have to produce and save because that's what it's going to take. You have to produce and save, pay off debts, reinvest back into production, and you're going to have to do this for generations, not just a few months, not just for four years of an administration. You have to do it for generations because it took generations to destroy it. So if you have a position in which that you are going to commit the American people to living a lesser standard of living, working twice as hard, saving and paying off debt, not purchasing and increasing your standard of living, if you want to commit that to the people for generations, like not just you, not just your kids, but your grandchildren and probably even your great-grandchildren, and you put them in that position in which that they are going to have to work twice as hard for half as much for their entire life, then you might be able to do it. Right? You might be able to bring the manufacturing back to the United States in a way that is competitive, that you can then sell your products out there to the rest of the world. Otherwise, we're going to sit in a position in which that only the elite have what it is that they truly want, and everybody else is going to suffer the consequences of living a lesser standard of living. Right? Like if you don't, here's a good way of looking at it. Like we brought this up the other day. The Russian elite who have the money will get whatever they want, right? All these exotic cars that are not allowed to go into Russia, they make it into Russia for the rich elite. They have the money. They will get their product. Right? But everybody else will suffer the consequences who normally lived off of the system or the way the system would operate and how it is that these cars would come into Russia, they would be able to buy them. But now, unless you are the absolute highest of the elitists willing to spend an incredible amount of money, you're not going to get your product. Only they will. And that's exactly what would happen here in the United States. If you denied the products to come in here, the people who have the money, who want those products, will get them. Everybody else will suffer without. All right, moving on. I was thinking, what if instead, if someone buying out debt, we sell them a product? Well, that's just the thing. How do you sell them a product when they can build it so much cheaper than you can? The only way that you can sell them a product is if you did not ask as much for it. If you don't ask as much for it, then you have to lower your standard of living, because most people have an elevated standard of living in which that they are no longer competitive as producing products for the world out there if they can produce it cheaper for themselves. This is it's the Cantillon effect. You can't stop it. In fact, trying to stop it looks incredibly scary, right? And that's the only way you can really say this, is that it looks incredibly scary, because think about what it is that the government would have to do to deny people the right to move into luxuries. Like, you've worked hard. Think about this for just a second. You just wipe out all the government rules and everything for just a second. You've been working really hard. You have saved and acquired a nice position with your savings. Now, from that hard work, you want to enjoy it. You want to have a better house, you want a better car, you want better clothing, you want better food, you want all this stuff, right? Because you've worked hard, you produced, and you saved. Now, the moment that you start buying nicer houses, nicer cars, nicer clothes, nicer toys, better food, what you are going to do is it's going to raise the prices, right? That's more consumption that is happening. The more people consume, the more supply-demand imbalances occur. So as people are increasing their standard of living, they are causing the price increases to move up. When price increases move up, the foreign competition starts to move in. You can't stop this from happening. Right? I mean, you can create rules, but what do those rules look like? Don't buy those products. In fact, don't buy anything of, let's go ahead and put a foot on the face of the people and restrict them from moving into luxuries. And in fact, we're going to take the production. It's going to belong to the government, because the people who produce are going to earn too much and move into luxury, so we'll take the production, the government. And they will be in control of it. And that's okay. We'll provide living for everybody. But it's not going to be a great living, but we'll all at least eat, and we'll all have a place to live. That's what it looks like. It looks like communism. So in order to stop the Cantillon effect or restrict it from happening, it's going to be very tyranny, right? Tyrannical. It's going to be government control, not allowing people to move into the free will of what it is that they want to do. Their hard work and production and savings will no longer be available to them, because the moment that they start to enjoy it, the whole thing starts to come undone. So recognizing it for what it is and understanding how it is that we've moved into this position, why it is that the United States, being the world's greatest manufacturer of all the wonderful products out there, has now flipped. We're the importer of products, but not the producer of products. Why? Because of the higher standard of living that we've moved into. We're just not competitive. All right, what happens next? People can't afford to buy the products what the investors are invested in, and the investors start cashing out, and then it all goes down. What happens next? People can't afford to buy the products. Okay, I kind of agree with that. I kind of agree with that the people that will be the next thing, is that the people just simply can't buy those foreign products out there. And now one of the reasons why they wouldn't be able to buy it is because they're debt saturated. Like, if the people themselves can no longer take out a credit card in order to buy the stuff, then they're not going to be importing the stuff from a foreign nation. And this is really where I think a lot of people are starting to find themselves within this economy, is that they're literally debt saturated. They would love to take out more debt, go out there and buy those toys, but it ain't going to happen because they can't make any more payments on it. And I believe this is coming more and more to the average person out there. And although that looks like it would be an economic crisis in the making, which it really is, think about the idea of UBI. Like, how much UBI narrative is being pushed out there right now? Quite a bit of it. Why? Because the United States needs to produce a consumer. That's it. They don't produce stuff, we produce a consumer. And if the consumer is debt saturated and can't take on any more debt in order to buy the products, they will literally force feed the money into us to make sure that we buy the production of the world, so the world will continue to buy our debt. And this is really what I see happening. I mean, it will get to a point in this nation in which that no matter how much they lower rates, it will not, like, even if you were to go negative with interest rates, I don't think that they could actually get the people to stimulate the economy anymore. There was talk from the Federal Reserve, if you go and listen to some of the stuff that they were talking about during the great financial crisis, there was the assumption that once they hit the lower bound of zero and the ability to stimulate the economy with the adjustment of interest rates was no longer working, they had assumed or estimated that they would have to take interest rates negative 6.5% during that time in order to have the stimulating effect that they would normally get from the adjustment of Fed funds rate. Think about that. They hit the lower bound of zero in 2008 and said, well, if we were to stimulate the economy through the adjustment of rates, we would have to take it down negative 6.5% in order to get the people to borrow enough money to go out there and stimulate the economy. They knew it wasn't going to work. So they took it to zero interest rate policy, ZERP, right? And they went into massive asset purchases, quantitative easing. This is really how they were able to stimulate the economy, and it hardly worked. I mean, you think about it, they were looking for inflation to be up above 2%. They were trying to acquire a 2% target. They failed. They couldn't do it. Balance sheet adjustments from $850 billion to over $4.5 trillion failed. It didn't work. Yet everybody seems to think, well, no, money printer go off, prices go up. And it was just like, well, then explain quantitative easing 1, 2, 3, and 4. Explain why it is that at the end of 2018, in November of 2018, John Williams gave a speech, Monetary Policy Strategies for a Low Neutral Interest Rate World, in which that he said that the problem that they needed to solve these days was the risk of inflation that was persistently too low rather than too high. How could that possibly be? If money printer go off causing prices to go up, quantitative easing 1, 2, 3, and 4 should have just absolutely annihilated the dollar, causing a hyperinflation scenario. That's what I believed back in 2018, going into 2011. That's exactly what I believed. People would have asked me back then, hey, how much longer does the dollar have before it completely fails? I would have said, nah, it ain't got much longer yet. And this was in 2011. I dumped every dime I had into silver, believing that that was the only way I could have protected myself. Now I look back on it, and I'm probably about even on my silver. But what did the stock market do? I mean, the Dow was at 6,000 at the time. I could have dumped all that money into the Dow and done extraordinarily well. But no, I put it into the safe asset of silver, getting out of that third-party claim, knowing that silver was going to go to the moon, $500 an ounce silver, listening to Max Kaiser talking about the dollar destruction, talking about the hyperinflation. Didn't happen. So here I was sitting on a pile of silver that did almost nothing for me. Then one day I was broke. I had a broken car. I had no way of getting to work. All right. That box of silver was there. That saved me. It was an insurance policy. I busted out 165 ounces, and a guy signed a title over to me. Traded his Tahoe for 165 ounces of silver. I looked at that silver and I said, you are not the inflationary protection that I am looking for, but you are a hell of a good insurance policy. Outside of that third-party claim, outside of anybody else's security. It's mine, it's my personal asset, something that I have that gives me the ability to sleep at night. I like silver. I am all for the purchase of silver. But the idea that it was going to be protecting me from an inflationary scenario, when? When did that happen? I haven't seen it yet. Hey, here inflation's coming back down. Silver's still sitting under its all-time high. Like a lot under its all-time high. So again, I had to reevaluate everything that I was thinking about back in the day, considering that we were going into what would have been a hell of a lot more money expansion back during the great financial crisis than we experienced during COVID. I mean, you think about it, they doubled the balance sheet during COVID. They quadrupled it back in the great financial crisis. It was a hell of a lot more money printing on a percentage basis back then, but it didn't do it. It didn't do what it is that the Federal Reserve was looking for, hoping that they could actually get a 2% inflation out of it. It didn't work. I mean, even Donald Trump at the end of his administration was saying there's no inflation. The Fed should be printing money. They should take interest rates into negative territory. The rich people in the room know what I'm talking about. Now, when I hear Donald Trump saying those words, you know what he's talking about, right? New money coming into the system. And anytime you have new money coming into the system, you have a separation between the rich and the poor. And I don't care if you give it to the poor or if you give it to the rich. It will separate the masses. It will separate them. It happens every time. All you have to do is just study up on history. Cantillon effect. And so knowing that's how it goes down and knowing what it's going to take in order to bring production back to this country, in order to have a standard of living that is elevated, in order to continue on with the system in which that we have, it's going to take a whole lot of perception change. It's going to take a whole lot of controlling of the narrative. Right? Because that's what's really doing it. It's not the interest rate adjustments anymore. All right, bigger to come. I've made more money this year than ever. I wonder if Trump knows the new Fed monetary policy. Absolutely he does. Absolutely he does, right? Because there's no way that you can't. There's no way that he couldn't. And this is really what blows me away about all this, is that here you have all these government officials out there. Everybody. Right? Like Congress, Senate, President, I don't care who they are. Not a single one of them, not a single one has ever stepped up and say, so the Federal Reserve really isn't going for a 2% target, but going for a 2% average inflation rate over time with no mathematical formula for figuring it out. So tell me, how is it that you are looking at the inflation or the average inflation rate over time? Please explain that. Not a single congressman, senator, president, nobody. Right? In fact, most people don't even talk about it in general, except for the uneducated economist. I'm the only one who won't let it go. Because that's exactly what they said that they were doing. Going for 2% average inflation rate over time with no mathematical formula for figuring it out. Huh. Well, that seems pretty convenient, doesn't it? Yeah. For somebody who failed at their monetary policy, for somebody who has no way of actually stimulating the economy through interest rate adjustments, yeah, I would keep that a secret too. And since nobody wants to bring it up, including the president, right? Donald Trump won't bring it up. Biden didn't bring it up. Congressmen don't bring it up. Senators don't bring it up. Nobody brings it up. Even all the economists out there who look and talk negatively about the Federal Reserve doesn't bring this up. Doesn't say, hey, how do you figure out your average inflation rate over time considering there's no mathematical formula for figuring it out? They don't talk about it. All they talk about is 2% target. That doesn't exist. Huh. So all these people out there who are in control, right, of all the financial conditions and markets and all this other stuff, have no idea about what it is that the Federal Reserve is truly trying to do. And then on top of that, they believe that the government does have some sort of control over the Federal Reserve. Just think about how Donald Trump has stated he wants to have a say in monetary policy. You want to have a say in monetary policy? So what you are saying is that you don't have any idea or control over the strategy of the monetary policy. Because if you want a say in it, that means there is no say that is taking place today. So no, the government is not involved with the decision making of the FOMC. They have one person, the chairman, who is the spokesperson for the Federal Open Market Committee. Jerome Powell doesn't make the decisions on monetary policy. 12 voting members do. He has one vote. There's 5 alternatives, 2 advisors. This makes up the FOMC. These handful of people, 19 people, have so much influence and control over what it is that we have impacting our daily lives, and nobody knows who the hell they are. Isn't that amazing? Like, everybody knows who the hell Donald Trump is. Everybody knows, about Harris. Everybody knows about their monetary or knows about their political ideas and what it is that they want for the economy. But nobody knows who Lisa Cook is. Nobody knows who John Williams is. Nobody knows who Bostic is. All these people are so much more influential on our lives, and yet nobody knows who they are or what the hell they think. All right? Nobody knows it. I study that stuff up. I read up on the Federal Reserve speeches. I'm listening to these guys because what they have to say is more impactful on my life than any president is. All right? Most people don't see it that way, and I get it. I get why. But there's nothing out there that I see that is more important than the decision-making of the FOMC. These 19 people have more influence over the entire lives of everybody on this globe than any other group does. Right? And nobody knows who they are. Nobody knows what they talk about. All right, what time is it? All righty, guys, I gots to go. Preach it, bro. Well, I appreciate you guys. John Williams, composer? No, John Williams from Shadow Stats? No, John Williams is the New York Fed president. The New York Fed president has a permanent, from what I understand, I don't know if things have changed, but from what I understand, the New York Fed president has a permanent seat on the FOMC. Now, what's really interesting is that John Williams is very quiet. This dude is probably one of the most influential people at the FOMC, and he hardly says anything. So you go back and you read that speech, Monetary Policy Strategies for a Low Neutral Interest Rate World, and you internalize the information that he was talking about within that speech, and it is a very profound impact on, or a very profound speech that impacts our lives. And it's very obvious that they had a plan prior to COVID. They even said it straight up in there. We are going to have a situation in which that we allow inflation to run above 2% for some time. Okay? Said it straight up in that speech. Come August 20, I think it was August 27th of 2020, Jerome Powell gave a speech that reiterated that exact thing as part of the Fed's strategy, that they are going to be pushing inflation moderately above 2% for some time. Not a 2% target. Right? And so John Williams from the New York Fed is very, very influential. Okay, shout out from Corpus Christi, Texas. Well, right on. Low blood pressure. Thank you very much for the $2. Very, very cool of you to support the Uneducated Economist. You guys are awesome. I got to go back to work, so thank you very much for hanging out for this, listening to me rant on about interest rates and how they are not impacting the economy like they once had. You can see that obviously within the mortgage market right now. Part of the way that I was able to look and deal and understand the economy in the way that I do has a lot to do with understanding monetary history. This right here is Cantillon's essay on economic theory. It is old. It is literally hundreds of years old. He talks about horses and wagons and stuff like that. Today we have cell phones and airplanes. It's not the same time. Things have changed, but the underlying economic forces that he discusses inside of this essay are very prevalent today. You can see them. Right? And so this essay is available at the Mises Institute for free. Type in Cantillon essay on economic theory, you will find it there. However, you can buy this essay from Amazon. There's a link down in the description of this video. When you buy the essay from the Amazon affiliate link, I will get a little commission off of that. If you don't want to buy the essay, buy whatever you want. Just click on that affiliate link first, put whatever you want in the cart. I will get another little commission off of whatever it is that you want to buy for yourself. Just use that Amazon affiliate link first, and you'll be supporting the Uneducated Economist. Thank you guys for being here. We will soon do a members-only live stream. We haven't done them recently because the Federal Reserve has essentially gone quiet before they actually do their meeting. But they will come back out with speeches, and we're going to learn a little bit more about monetary policy and what it is that we can expect from the future from those speeches. If you want to break down those speeches with me, become a member of the channel. It's $1 a month, $12 a year, $120 a decade for hardcore information that you will not get anywhere else. We break this stuff down so the average everyday person can understand it. We have a bunch of member-only videos where we have broken down those speeches so that you can internalize it for yourself and now understand it in a way that is different from all these mainstream media narratives that are pushed out there to basically misguide the people, and you will recognize the propaganda. Like, I don't know how else to explain it, but it becomes pretty obvious once you internalize this stuff for yourself. All right, guys, I got to go. Uneducated Economist, you let me know.